The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi, folks. Good to be back right here on the 1st of August. A little late. Boston traffic. 2 words. Boston traffic. Anybody from around here knows exactly what I'm talking about. Wasn't so much the traffic. It's really the road repair in the summertime. I'm actually happy that they're doing all this road repair. The roads were just terrible the last couple of years. So I'm not complaining. I'm just a little upset that I'm a few minutes late. All right, let's get going here. The Dow is down. Let me just do this one at a time. I'm showing the E-mini down 375 at 2813. You see the Chapman wave peak D yet again, another peak D, daily peak D at 2849.50. Weekly just made a one at, that was last night, yeah, at 5 o'clock yesterday. Peak D in the 120-minute chart, trading from the high of the 28 to 26 area down to, actually it was a little more, down to where we are right now, 2813. All right, now let's go through this one at a time. The reason why we went to a sell signal the other day on the certainly on the Dow and one of the indices is because within the context of what we were looking at, we're looking at so many Chapman wave peak Ds and Es that it was very evident to me that at least a short-term pullback was in the cards. That's first of all. Secondly, we can't talk about the weekly chart because we need a full week with a lower high bar to even set the stage for a peak D. So you can see the daily made a peak D at 25,587. We're down 49. We were up quite a bit more. We're up about 50 something, as I recall when I looked at my cell phone when I was out. So this is very interesting. Why? Fed comes out in about less than 2 hours' time with their statement. But as you can see, the MACD, the moving average convergence divergence in the daily chart is still very strong. It is finally turning down a little bit, the little green line, that's the 9-period differential. I call it the fast moving average. The stochastic has just gone under 80%. And I was saying, how could it go from the 96, 97% area without a serious pullback? And what I said to subscribers, it'll be either time or just a slow grind to the downside over a couple of days. And that's really what we've got. Stochastic right now is at 77%. On balance volumes pulling back. Relative strength, a little gray line right there, the left side of the screen. And the daily chart starting to pull back. It's still at 62% or so. That's pretty good. So it's the weekly chart that we're really keeping our eye on. Why? Because there was a peak E at the 26,616 high on the 26th of January. It pulled back sharply to 23,360, rallied quickly up to 25,800. That's a big move. And it comes all the way down, and it was the only index to make a new low from the February low. It went on April, I think the 4th, went to 23,344. So 23,344, rallies up to the most recent high of 25,587. So this is going to be very important what happens Friday, how we close on this weekly chart, because the MACD is at 81%. That's good. Over 80 is good. And the MACD just crossed positive. So we're going to watch this closely. And you've got a peak G in the C1, C2, or a peak G in the 120-minute chart. Monthly chart, since this is closed now, we've closed July. Monthly chart is a very good candle. What happens next is going to be absolutely imperative, not just for the short term, not just for the intermediate term. I suspect it's going to start giving us an incredible amount of information about the year, the full year of 2018. All right, let's go. SPX.X, this is the S&P 500. S&P 500 index is down 3 at 2813, trying to rally. It's pulling back some. Made a peak E at 2848.03, and now we're down to the 2813 level. So that is 35 points down. Peak D, if there's no new high this week, and that's going to be very important because this one got really close to the 2872's January 26 high. And the monthly chart, as I say, has got that U-shaped pattern, also very good. Now what I want to do is to go to the QQQs, because this is imperative to monitor. You've got Apple, fabulous, earnings fabulous, everything is up 10 at 200.40. Apple at 200. And now what we're looking at is The QQQ is the power, it's not the power shares, it's the Invesco QQQ Trust series, makes a high of 182.93, all-time high on the 23rd of July, trading right now at 176, having gone to the 174s. So this is saying sell mode is still intact in the Qs, and the weekly chart is probably going to make a peak D top, at least a short-term top. I don't see how what's going to get it to 182.94 to recycle higher. And the monthly chart is still very strong, but it bumped into resistance. IWM, it's very important. We go straight to the IWM because IWM is really the clue to us. And what we're looking at here is a 164.86 down minus 1.01%, way deeper than the other indices. It's on this trend line support in the daily chart. I think this is weakening, and I think it's going to be pulling back. I would not be surprised within a week if we're looking at the IWM, the Russell 2000 iShares, in the 163 or 162s. That's going to be very interesting. All right, next thing we want to look at is gold. Where is gold right now? Gold earlier was a little weak. Oh, it's now still very weak. Down 5.5 at 12.28. That pattern, I was saying before, if ever there was an opportunity for gold to try to rally, it's got to take that opportunity, because if it starts to slide, and I said if it slips below 12.28 in the next couple of days, that's not good. Well, here it is, just under 12.28. I'm watching it closely because that weekly chart is not looking good at all. So parameters to watch: if gold closes under 12.20, it's very negative. Closes under 12.20 for 2 sessions, not just one dip and pop. If it closes for 2 sessions below 12.20, I have to consider that the dollar, and I'm going to move to the dollar right away, the dollar, which we are still long for my opening call subscribers, is only up 12 cents at 94.61, but it is holding steady in this whole mid-range. Look, if I take my rectangle chart and I just go like this, technical tool, and I fill this in, look how much it's traded. The dollar's traded in this 94.30 to 94.65 area for months, well, 2.5 months. And that's important, because we will know soon enough whether it's a sign of weakness or strength, because that weekly chart, anytime the dollar even just dips under 93.35, the 93.35 to 93 area is going to be absolutely imperative to hold if there is weakness. Looking at the EUR USD, this is the euro dollar currency pair, pulling back is at 1.16. underneath both the 9-period moving average and the 14-period moving average. If you look at the USD JPY, where are we here? We're looking at 111.73. Nice pop to the upside. Not great, but nice enough to say it's above the 9 and the 14-period moving averages in the 111s, 111.50 to 111.71. It's trading at 111. I'm sorry, I should have said 111.50s. It's right here at 111.71. Nice action. It looks like the weekly chart does want to go to a leg D, and that would be above 113.32, the high of the 19th of July. If you're looking at crude oil, this is going to be very interesting. Crude oil now is down $1.16. I drew yesterday this arch formation. It's called the lowercase h pattern in the Chapman wave methodology. I now want to look to see how it's impacting the XLE. I had a number of questions about the XLE, and I said that it was kind of in the range. Very important period over the next couple of days. Does it hold the 75.80, I think it was? Whoa, look at this. Big smash to the downside. $1.38, 75.75. Peak C minus to another peak C. This could be a failure pattern. So far, it hasn't broken the very important 75.05 area for the 9-period moving, 14-period moving average in the weekly chart. But this is saying crude oil is weakening and is affecting the XLE, which is the S&P Select Energy Spider Fund. Just wanted to, I had so many questions about it, I thought I'd just relate it there. I'm missing TLT. Is it TLT up or down? TLT is down a point and a 101. This is a leg F to the downside, broken below the last major low, the 6th of June. 118.42. Oh, wait, I said that if the market turns down, yields should pull back as the yields go up. we've got the TLT pulling back as yields go higher. Let's look at that TNX. Is that TNX now, the 10-year, is it close to the highs? Well, it's gone to a leg E and it's taking out the high that was made back on the 13th of June of 30.09. Today's high is 30.16. So that weekly chart, as I said before, I think the weekly chart just says that yields are stuck in a range. They're going to rally and pull back, but within the range of 3.1 for the 10-year yield and 2.8, 28 for the low. Well, it's right in the middle there. No, it's a little higher. Okay, so we're going to be watching this very closely. Is that what's impacting the market? Because now look at this. Now the Dow's down 81, S&P is down 6.5. One of the reasons why we went to a short position in the Dow the other day, on Friday, was because if you look at this chart right here, IMDU, you'll see, where did I type that? Did I type in the wrong place? I did. So IMDU is because of those Ds. Look, you got a peak D on Friday because there was a lower high from Thursday's 25,587 high. That's where we went short. We went short, if you remember, the day after the high of the 12th of June at 25,402. We did go short, but as I recall, we got stopped out fairly quickly on the little rebound and then had to struggle to get back in, but we were short for a good chunk of the way in the market back in the February decline. That was a peak D as well. So I do have respect for the peak Ds in the Chapman wave methodology, and that's a technique we've used. And what I'd said is I'm not going on the MACD being very strong. I'm going on the methodology that I've developed over all these decades of that fourth highest peak. Other things can happen. Peak D is where you take your foot off the accelerator, hover over the brake, and then you make an adjustment accordingly. So I got that out the way. I think we've covered almost everything I needed to. Question here. Do I show? Yes. Got a question. I'll answer that a little later on. Just got back in. So, yeah, we go. IQ. Morning, Basil. What do you think of IQ? I had a small position at 1606, sold half at 3208. I'm now looking to buying back this pullback. You always seem to keep me out of trouble. So what you say here, thanks, Greg. Greg, you just gave me the voodoo, okay? Here we go. IQ, which is IQIYI. What is it? Well, I never remember what the name of this is. This is called IQ. That's what it's called. IQIYI. I don't even know how to pronounce it, but I followed it for a while. So, Greg, first of all, congratulations on a fantastic trade. Secondly, I'm watching this. I know there's a peak C in the weekly, and then we technically in the Chapman wave, eventually we should get to a D. I think there's a choppiness here that you just need to take into account for. I would start, give me an IM, just on email, whatever it is. If you can see this thing, I'd prefer to see how it handles the 30 support. It's at 32.18. It did gap up, but now it's down from that high. Still up 13 cents, but this is not a pattern that I like very much. It doesn't mean to say it has to break down, but it just says that it could stay between the 29.50s and 34.50s for quite a while. So I'm going to say hold off for now. I'll do a little more work over the week, over the evening. I'll be right back. Basil Chapman.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors. Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, good. I got a huge bunch of questions, but I also had a statement. I just managed to read it during the break, and I'd like to just read this out loud because it covers a lot of, how can I put it? It covers a lot of ground in that, if I can just find the thing. So is it better on this computer or that computer? Let me just see. All right, I can't find it right now. But basically, it was talking about the yield, and it was talking about what would be the rate where people decide that it's better to be out of stocks and in something with yields. And it's I'll actually deal with it tomorrow. It's a good question. Let me think about the answer. That is going to be impactful, and that's the reason why I have focused on the yield, focused on the 10-year yield, and we're going to be watching this very closely. So, question here about Caterpillar. Caterpillar right now is down 5 at 138. Had a great run. It went to 146 or so, 147. Now it's at 138. Another question about UTX, which we still own. We're long, holding it really well. It's down 75 cents at 134.99. We're in from the 119s. It's just look at that weekly chart, and that's the reason why I didn't want to become overly bearish, but at the same time I had to just follow the methodology because there are within the Dow there's a rotation going on. Look, Boeing right now is down 3 at 353. Made that peak D that I was talking about. It's pulling back. I think it's stuck in this second U-shaped pattern, and I would not be surprised if it's going to start heading towards the 330s fairly soon, 343, 330s. I hope I answered that question. Triple M had a spectacular day yesterday. Now it's giving back. Yeah, there it is, down 4.5 at 207.90. I'm watching these. There's rotation going on here. It's as if the fund managers with a really heavy hand are looking at the cyclicals, and they're looking at them each one individually in a very specific way. It looks to me like they're trying to establish bases in UTX and Triple M. And that's the reason why I think the Dow is going to be the most spectacular winner when it finally gets on track and soars into the 26,000s sometime this year. But before then, there's a lot of water under the dam that needs to be resolved. Next question I had was platinum. Yeah, platinum has been quite weak. Week again today, down. It's at 18.60, down 27. Not good. Minus 3.2%. I'd be real careful. Next question was, just want to get some of these. Oh, look, thank you. Nicholas says, great calls. Thank you. Regards, Nick. I'm no patting on the back. Believe me, I don't do that because those elves are waiting to smack you on the nose as soon as you take your hands off the wheel to pat yourself on the back. You hit the tree. So thank you anyway, Nick. Day is young. Greg wants to know about IQ. So let me just go back to IQ. IQ is one of those stocks like SQ. There are a couple that I have on my list. Every day I show the list. I'm looking at this list and I'm saying this is going to become a focal point a little later on. It's got the stocks that I've missed in a way, and now I don't want to touch them until they resolve the down moves. So this IQ is one of those. Just be careful right now. Don't be too aggressive. In fact, I'm going to say don't be too aggressive about going long. If you got something that looks like it could work, fine, just go ahead, put your stop in. But I would. We've got a nice cash position. I don't want to overdo it. Let's see. The next question was, did I cover? Yeah, thank you. Okay, monthly chart, Dow, restart, XY. Okay, so let me go through this because this is a good day. Brand new month. Let's go to all the different indexes. INDU. Look, so the Dow has closed the month of July with a beautiful candle. Start of the very first day of August. So far, it's a down move. But you know what? An hour, 2 hours, 3 hours into the new month, how can you even think of projecting what will happen? But you can say what might happen. And what might happen is that we're in a consolidation because of the rotational nature of what we've seen over the last, I'd say, 3 days. Look, Apple's still up 9.5. Some of the other big caps are NDX 100 or top 50 are not doing as well. So it's very individualized now. And this is where the distribution effect comes into play. And that says to me, within the distribution, if you look at the Dow, the reason why it's held, even though there's a peak D, and this is the fourth day, last time on the fourth day, we smashed to the downside. That was on June the 15th, open at 25,116, go to 25,130. Next thing you know, you're down in the 24,890s. And then that was it. It was all the way down to 23,997. Now I think the rotation is saying, don't get too carried away on the short side until certain things happen. For me, there are certain things are that I want to see the MACD cross negative. It's going to take about another 230 points or so for the MACD actually to get down to that 9-period moving average. The 9-period moving differential to get down to the 26-period red line exponential moving average. Okay, now let's look at this. So the monthly chart of the Dow says very simply, there could be a Chapman wave right shoulder failure if the MACD, which is just barely positive, starts to cross negative, and the stochastic, which is at 67%, starts to go to 57, 55%. What will happen is there'll be a quick move to the middle of the range, 24,700s maybe. So we don't see that just yet because we're at 25,338. I am saying the Fed is coming out at 2 o'clock. They're going to say, what can they say? The news has just been fantastic. Rates theoretically should be going higher. That's just the traditional way that things work. The economy improves very strongly. The demand for loans increases, obviously. People want to do things with their money. They want to invest. And therefore the rates normally go higher. Is that a big deal? I don't think it should be a big deal. It becomes a big deal if the rate becomes so enticing, and that was Kevin's point earlier, and I like that point, that if the rates become so enticing that it becomes safer now to put a sum, not a chunk, but some money starts to migrate from the insecurity of the market, stock market, to the so-called safety or a little bit of security of bond, and in this case, bond yields. A good concept. Let's see if that's going to be working in the next phase. Now, One of the things that I want to look at is I had a question about, and in the den as well. So Ruby said Bitcoin dips below 100-day moving average but rebounds. So let me just do this. GBTC, which is the Bitcoin investment trust, down 32 cents, down 3% at 10.10. I said be careful. I'm not in the weekly chart is very negative. I just be careful. If you're a day trader and you're able to play this and you've made money, then you've got the handle on this. Congratulations. But for those of you who want to put it into a portfolio, this is just not the vehicle that I suspect you should be using. It's just too dangerous and too whippy. And not only that, how are you going to get out if you can't trade when it's having its biggest move overnight? And the next morning you wake up, either it's massively up or it's massively down. What do? Avoid it. That's what I say if you're a longer term trader. I'll be right back. Dow's down 78, S&P's down 6.5.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
So in the Chapman Wave methodology, remember D is where other things can happen. That doesn't mean to say that it's going to turn around and collapse. Doesn't mean to say it's going to spiral high and recycle. That's where you watch for that very thing to happen. And you always watch for either round numbers or doji candles at the D. Well, lo and behold, the 10-minute E-mini makes a low at, I knew that while I was away, this is exactly the trade I wanted. 28.13 was the low at 20 to 6 this morning, goes to peak A, pulls back, goes then to a higher peak, peak B, pulls back, breaks above it, makes a leg B, which goes to leg C at 20 to 10 at 28.22.50, pulls back, holds the 14-period exponential moving average, walks the 9-period, the green line, and goes to what? The doji candle of leg D goes to peak D at 28.2575. And look at that sell. Look at the way the MACD turned down. Look at the beautiful heads up that both the stochastic and the on-balance volume gave you right there. People say moving averages are lagging indicators. How can you use them? Using these techniques, you can really time things very nicely to the bar. And what happens? It goes below the doji, and now we're in leg B to the downside at 28.09, 28.26. Well, let's call it 28.25. 75 was the high, trading now at 28.10. Beautiful, beautiful peak D top in the 10-minute. Now it's going to have a little bit of a rally. Okay, so let's get back to our story. What I really wanted to show you was, so I had a question about Venom. What is Venom? I never remember. Oh, it's the Viper Energy Partners LP, makes a leg E in the monthly chart at 34.49. So far, the high is 34.37. It looks to me like it's going to squeak above that high. Remember, this is the rectangle pattern, although I would like to see longer time frame, more like a V shape than a rectangle. But it has gone from the previous high that was made at, what did I say it was, 33 something, 34.49, pulls back to just under 30 and rallies back. Today's high is 34.37. So very nice. 12 cents, 13 cents for making another leg higher. Yeah, I think this is in a range. And the question was, big volume spike. Yeah, I'm a little nervous about volume spikes going to highs for two reasons. One is, if I see it at a low, I get that there's a possibility of a Chapman wave climactic reversal, volume reversal. But when I see it at highs, it is so seldom. You can go through tens of thousands of charts, and you'll be hard pressed to find any that made a major high in the daily chart with the highest volume. It's rare, unless it's Friday and it's a gap up on news, and that was the high and it gaps up, and then from that moment it doesn't see that for the next week or two. That should be a significant high, but it's so rare. But lows are something very different because there's a selling climax. So I'm suspecting that we have a little bit higher to go. It's acting very well. Definitely not a short. I'm just saying that it might just consolidate a little bit, even if it makes another high. Let's go to Mark in Fort Collins. Mark, how are you? Do I have Mark? Do I have anything? Hello?
Hello.
Yes,
Can you hear
you're
me?
there. Hi, Mark. How are you doing?
Good. How are you?
Good.
Hey, wanted to see if you've got time to take a quick look at the VIX, and then I use the UVXY to trade that sometimes. Let me know what your thoughts are.
Okay. So the UVXY, well, let's just go to the VIX first of all. The VIX is trading at 13.38. It is underneath the 200-period exponential moving average, underneath the 50-period moving average. It is just above the 14 and the 9-period moving average at 13.37. The MACD is turned up. It's not very strong, but it's turned up. Stochastic is very strong, but it hasn't had a big price movement. Nothing like when the stochastic went to 64% in June. At that point, the VIX went to 19.65. So now let's look at this and try to be as focused as possible. I'm not going to go into the other ETFs just at the moment. I'm looking at the VIX itself. If you look at the weekly chart, you'll see there have been a number of moves to the upside and a number of moves below. I'm going to highlight this little dotted line right here. That orange line is the 200-period exponential moving average in the weekly chart. You can see, forget about the price, but you can see in time there have been 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. There have been 14 moves above the 200-period moving average from the week of the 2nd of February and going to the week of the 4th of May. Then, although there was one spike above, almost all the action has been below So you've got, I can't even remember. How many bars did I say? Now it's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. This is the 13th. Let me quickly go back. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. So we are 1 week away from having a match between the number of bars where the volatility index closed, this is a close, weekly close, above the 200-period moving average, and the number of bars that is closed below. You would anticipate that if it went to 50.30 in one of those bars the week of the 9th of February, where the rates, there was a fear about the rates, you would think, oh, okay, well, then you should see equal move to the downside. That's not really true. Even going back towards 10 is a big deal now in the volatility index. So as I'm looking at it, my eye says we're getting very close to where the MACD has used up a lot of time in the weekly chart. The histogram has started to decrease, getting closer to the 0% line, although it's still at minus 47. I want to see it much better. I'm sorry, minus 28. I want to see it over 0 if it's going to do anything at all. And the stochastic has had a very nice, very subtle inverse relationship because it's been making slightly higher lows and actually higher highs. But that tells me that we could be within a week of at least attempting another move in the VIX index, the volatility index, above the 200-period moving average. That would be not this week. I mean, within a week, so it's 2 weeks altogether, or 1.5 weeks, because today's Wednesday. Well, if that's the case, let's now look at the VIX, the VXY, you say? VXY. Do you look at the UVXY?
UVXY.
Okay, UVXY. Let's look at that one. Haven't got this notated. So the UVXY has a slightly different connotation here. And it's trading at 9.47, down 10 cents. And the UVXY is the ProShares Ultra VIX short term. Not short, but short term. So that's saying that the VIX, UVXY, if the VIX is actually going to go from 13.34 where it is right now, then let's pick a number. Let's say 1450. Then the UVXY should rally somewhere to about the 960s or maybe even the 970s. Maybe let's just say 960s to be conservative. So as I'm looking at this, whoa, do you have time to hold on?
Yeah, that's fine.
Okay, so we're going to come right back with Mark and Ford Collins. You're looking at the Dow down 60, S&P down 379, not as weak. It's the 500 stocks. That's a good sign. And we're going to be looking at the VIX. What is the chance the VIX actually rallies over the next week?
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full custom optimization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of The Trader's Edge, heard here at TFNN.com.
Hi, folks. So I just wanted to mention the IYT, which is the iShares Transportation Index. It's got a leg E. It's pulling back. It's down 1.45 at 197.84. Now, that's really interesting after all. We looked at the crude oil, and the crude oil is pulling back. We looked at the XLE, that was pulling back. And we're looking at the XAL right now, and that is the airline index, and that is down $1.69 at a peak C. Oh, that's interesting. Oops, is that a peak C? Was that a double bottom? 97.31, 97. Oh, good. I thought that looked like a D. You know, when you do this so many hundreds of thousands of times, you just get to eyeball something and you say, oh, no, it's and I knew that there was something, everything about this looked like a D. And it is a D, peak D in the XAL. So isn't that interesting? Crude oil pulls back sharply. You'd expect the XAL is running. No, it's not. So as I said, this is a very mixed market. It's a market that is saying, it's really at this point, you know that expression on Wall Street, they love to say, it is a market of stocks, not a stock market. And it always sounds so intellectual, but I think they're right in this particular instance. This is really a market of stocks. After all, you know, that UTX shouldn't really be up in the 135 area where the market's been so choppy. And yet, as I said, we've been long this. It's still holding very nicely, at least for now. So we'll see what happens over the coming days. A good question in the den. Basil, X reports after the close. MT had good earnings. Should I buy USX? I think actually this person owns it, would like to add, but doesn't matter. I'm going to go through it right now. No, I think this is a peak E in US steel, down 45 cents, 35.98. I've got a feeling that most of the steel companies, the ones that I've been tracking at least, are not doing all that well. They need to do well and have the benefit of the tariffs. And at this point, US Steel is saying, boy, unless it's spectacular, it's just kind of ho-hum. It's in the middle of the range. So I'm just going to say, for safety's sake, no. Oh, is that the end of the show? You're going to go to Steve Rhodes, then you've got Dave White, you've got Tom O'Brien again. I'll be back tomorrow. Have a great day, and check out my opening call. Hope you find it beneficial, educational, and lucrative. Have a great day.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.